Yes, sir. What it do? It's your boy, Mr. Worshoe, aka the favorite investor. And listen, today I'm back with another video to help give y'all some clarification as to what's going on in the markets. Now, first of all, before we get into it, man, disclaimer, as always, please do not take any of the advice on this channel as a recommendation, and all views are my own, and information on this channel is for educational and informational purposes only. This is not financial advice and should not be a substitute for financial advice from a professional. Now, let's get into it today. Today we're talking about Netflix. Yeah, y'all know the same Netflix that probably everybody in the world has heard of. If you haven't heard of it, I don't even know if I can provide any clarity for you because, I mean, listen, let's just be honest. They are one of the biggest and largest streaming services out there on the planet. And a very interesting fact about them is that they have finally started to become a profitable company. And I'm saying this because I've been taking a good look at their financials, and let me just tell y'all, the future is bright. Now, let's get into this really quick though. Let me show y'all what I mean. We're just gonna go in and look at their financials really quick. And looking over at their statements, their total revenue has been growing annually. You see in 2015, it was at 7 billion, 16, 8 billion, 2017, 12 billion, 2018, 15. And they've been having a total revenue of above 20 billion since 2019, 20, and 21. So they're definitely making more money year over year, which is a huge plus. But the reason that I think that Wall Street is so bullish, and the reason that I'm bullish on them, is because of the fact that they have been now operating in a positive cash flow from their operating activities. So when you look at what they made in 2015, their cash from operating activities was negative $749. That means that after they got done with all of their expenses, they were still in the hole $749 million. And this was the case all the way up until 2020, right? Right up until the pandemic, they finally started having that positive cash flow at 2.43 billion. I think in 2020, I mean, honestly, everything was skyrocketing in 2020, but Netflix definitely did see a high valuation from this. In 2021, they had 392 million in cash flow. But what I want to show you guys is the quarterly, right? When you look at this and you look at the quarterly in 2000 and in the first quarter of 22, it was at 922 million. And then we have another positive cash flow quarter at 102 million, and then another one at 556 million. Now you can see that these cash flows have been kind of, a little wonky, but like for the most part, this is a company that was negative cash flow and it's now positive. You see what I'm saying? So they have been fluctuating, but they are putting out positive cash production. And another thing that if you notice, they're also keeping more free cash flow. So now they're able to start building up their cash reserves. So over the trailing 12 months, they have a positive free cash flow of 717 million, which is really, really good compared to where they were before, where they were operating in negative cash flow. So now some of y'all might be curious, asking me why I'm bringing this up now. Well, they were recently upgraded on Wall Street to a price target of $400. The price is currently sitting at about 320, and 400 is somewhere around this key resistance right here, if y'all can see that. So, the reason that this matters is because, you should be curious as to why they got upgraded. Like, why was Netflix upgraded? You know what I'm saying? And as you're sitting there and you're thinking about that, you got to think about the fact that Netflix has literally had this huge catalog of movies that they've been able to put out. So when I'm scrolling Netflix and I see all of the movies and TV shows that they have, I'm noticing that they're not coming from other companies. These are all productions that they've put on. This is all stuff that they have created in-house that they don't have to pay any kind of royalties to, right? They own the rights to that content, which is a big plus now because now they have this huge library that they can just continue to make money from as they have these subscriptions, right? They're a subscription-based company. So going back and looking at the financials, looking at it annually, you can see how their assets have been increasing year over year over year over year over year. So that means that they're able to put out these productions and they don't have to spend as much money to make these productions, right? Back then you'd have to figure out, they probably had to hire a whole team to produce the films. I'm not in the filmmaking industry, but I can only imagine that when you first start up and you first say, hey, I'm going to start getting into my own and doing my own productions, there's a lot of cost that comes into that. So I can see how now they've started to build those assets, and now they can keep on making money from those same assets. You see what I'm saying? Now, another thing that I really do like is that if you look at this, they were increasing their liabilities from 2015 to 2017. Somewhere around 2018, they started leveling off, and they've been sitting at about 26 billion to 28 billion in liabilities. And that's, I'm sure, things that they had to invest in order for them to go and start building up their assets so that they can start producing their own productions. Another thing that I really like, if you're looking at this, is that they've been increasing their book value per share, meaning the worth of their company, what their company is actually worth in the books. If the company were to go under, shareholders would be entitled to this dollar right here, right? So in 2015 it was $5. Fast forward to 2021, they're sitting at a valuation of $35 per share, a book value of $35 per share. I don't know about y'all, but that is pretty good to me. That is a huge change from 2015 to 2021. That is tremendous growth. And then if you really want to get crazy and look at it, go ahead and check out their quarterly book value increasing from at the beginning of this year at $39 to now in the third quarter, it's sitting at about 46. So I'm curious to see what their earnings for the fourth quarter come in at, but I'm expecting to see that book value increase. I don't know what number I want to see, but I definitely want to see it increase to 47, 48. I just want to make sure that the company is still going on that upwards trajectory, even as we are on the cusp of a recession and higher interest rates. Another thing that I really like as well is just looking at the ratios really quick, right? You see that price to book ratio a few months ago, going back to the annuals, a few months ago, they were literally sitting at a valuation of 21 times their book value. And as you guys can see, that book value has been increasing. And right now that price, right, that price to book ratio is sitting at about $6 right now. And that's because the price has come down so far this year that multiple has also decreased, which for me, I think it's a really good time to basically start buying into Netflix, because you're buying in as the company is starting to increase its revenues, starting to increase its cash flow, and is still trading at a very attractive price to book ratio. As you also look at its price to earnings ratio, that has been decreasing, but that has also been decreasing because their overall price, their overall income has been increasing, but the price has also been coming down. So that you're not seeing that crazy evaluation that you were seeing. I think that if we go back and look at the overview, it's trading at a 27x multiple right now, which we can see here. Looking at the statistics on a quarterly basis, you can see that the price to earnings has kind of been coming down. The second quarter of 2022, it was trading at a 15x multiple, and it's now been going back up quarter over quarter. So Netflix is definitely looking at a positive trajectory, and I can kind of see how Wall Street has upgraded them to a $400 price target, which is pretty big. I don't know if you guys saw the movement that happened when that was announced, but Wall Street is definitely bullish on Netflix. I'm bullish on Netflix, but like I said, don't take anything that I say here as a recommendation. This is not financial advice, and you should always do your own analysis before making an investment decision. Now, I am curious. Let me know down in the comments what y'all think about Netflix. But like I said, man, I currently have a position in Netflix. I entered, I think it was somewhere around 310 or so. This is the weekly chart here. Let's go back and look at the daily. I got in somewhere around here, and this is what I was talking about here. You guys see this huge pop from one day to the next. It really couldn't hold it, but as we're looking at it, it is in an uptrend. You guys see this here, higher high, right? Got another higher high here. We got another higher high here. So at the moment, this is currently your lower low. It hasn't broken structure, so I'm still looking for everything kind of keep on going in that upward trajectory. But like I said, man, don't take this as advice. I'm just giving you out what it is that I think is going on. The economy is bearish. Netflix is bullish. But anyways, it's your boy, Mr. World Shoe. Don't do nothing I wouldn't do. Happy investing and be safe out there, man. Make sure y'all protect the capital. You already know. I'll see y'all on the next one. Peace.